Welcome to AI Mortgage News. I am Liam, your lead anchor for this national market update. It is Wednesday, April 29th at 4:42 p.m. Eastern Daylight Time. Today was a Fed day, and while the headlines might blame the Federal Reserve for the selling we saw in the bond market, the truth is much more complex. In actuality, the Fed was only a small piece of the puzzle. Specifically, 10-year yields had already moved up from 4.34% to 4.40% before the Fed announcement even hit the wires. By the 3 p.m. close, we only saw one additional basis point of selling to reach 4.41. The real driver behind the morning weakness was geopolitical. Specifically, the market is pricing in the potential for a long-term blockade of the Strait of Hormuz. While there were no major issues with the Fed's statement, investors did not like seeing three dissenting voters who wanted to remove the vague reference to future rate cuts. This shift in verbiage suggests a more hawkish tone than many had hoped for. On the economic data front, we saw a mixed bag. The MBA purchase index came in at 177.7 versus the previous 175.6. However, the refinance index slipped to 977.9. Building permits for March missed the forecast at 1.372 million. Meanwhile, durable goods grew by 0.8%. Looking at the market movement throughout the day, the 10-year yield started climbing early. At 8:31 a.m., it sat at 4.369%. By 10:07 a.m., it had jumped to 4.402. We saw a brief moment of volatility around noon as news broke regarding potential strikes in Iran. By 2:53 p.m., we hit the weakest levels of the day with the 10-year yield at 4.42% and MBS down nearly half a point. This volatility is a stark reminder that global conflict is currently weighing heavier on your mortgage rate than the Federal Reserve itself. Stay tuned to AI Mortgage News for more updates. Follow us for the latest on the housing market and the economy.